Give me a thumbs up for this little guy right here. Look how tiny he is. Say hi. No yawn today? No? What's going on, guys? It's Investing Hustler here, and today we're going to talk about some big news with Aurora Cannabis. I'm also going to talk about my concerns about this news, and there's lots of news going on in the marijuana sector. It seems like we're having a green day in the marijuana sector, so we're going to touch up on all these companies. Right now, it's 12:45 p.m. on Tuesday, February 26th. So we currently seem to be having a fairly decent green day. CGC is up 3.03%. Canopy growth, ticker symbol WEED, is up 2.82%. Aurora Cannabis seems to be having a good day as well. Aurora Cannabis is currently up 3.65% and 3.84% in the New York Stock Exchange. Kronos is having a good day as well. I think they're up 6%. We're just going to wait for these charts to load. Kronos is currently up 6.34%. Hexo also seems to be having a very good day. Hexo's up 2.2%. And Tilray seems to be also having a good day. Tilray is currently up 1.91%. And let's talk about Kiron. Kiron is doing very bad today. I think they're down 5-6%. I did cut my losses in the morning. So you know what they say, a good investor knows when to cut his losses. Oh, Kiron is now down 10%. So I'm pretty glad I cut my losses. I'm going to be looking for another buying opportunity. Did say yesterday that I took a gamble in Kiron. Actually, I had a good day trade during the day. I made some profit with Kiron during the day. And then I took a gamble near the evening, afternoon, and I held on to Kiron overnight. And as you guys can see, Kiron took a nice dip. I will be looking for a nice time to start a position with Kiron for another day trade, swing trade. Or if Kiron goes down low enough, I might get a long-term position with them. So we'll be keeping an eye on these companies. Right now, the whole sector seems to be doing good, minus Kiron. Let's just take a look at Namaste real quick. Namaste is currently down 0.95%, nothing too big. How's T-God doing? T-God is currently up 1.83%. Planet 13 is not having a good day, down 4.30%. So the big companies seem to be doing well today, and the smaller companies aren't doing that great. But anyways, let's move on to some news. And first, we're going to talk about Gundlach compares cannabis to Bitcoin. So Jeffrey Gundlach predicted Bitcoin's crash after the cryptocurrency's peak in December 2017. He compared Bitcoin's movement to the dot-com bubble, although Gundlach believes Bitcoin can easily rise 25% and return to $5,000 this year. He still doesn't recommend making any moves on cryptocurrency. And then now he's saying the same thing about cannabis mania. So Gundlach also believes that the cannabis could be another mania. In his Yahoo Finance interview, he said, "I don't understand why, just because it used to be illegal, that somehow it got this special magic to it. But it's interesting. The cannabis thing does seem kind of like a mania. I mean, people probably make a lot of money in some parts of it, but that's just not for me. I have no interest in this mania stuff. I just watch amusedly from the sidelines." So what do you think about Gundlach? He's saying it's a mania, comparing it to the dot-com bubble, comparing it to cryptocurrency. I believe that maybe he's right with some companies, because I do think that some of these companies might end up disappearing in the long term. But I think like the bigger companies are here to stay and are very good investments in the long term. It's kind of hard to say. But yeah, let me know what you guys think. If you guys want to read that full article, you guys could type that in. Gundlach compares cannabis to Bitcoin. So another article, and this is by the Motley Fool, is at what price is Canopy growth worth buying? So I'm just going to go straight to the bottom. If you guys want to read this full article, you guys could check it out. So here's the price at which Canopy growth becomes attractive. Taking both sides of the argument into account, I do see value in Canopy growth stock, just not at $44 a share. Rather, I would argue that Canopy becomes an attractive investment in the $25 to $27 area, or about 40% lower than where the company is currently trading. And I'm guessing they're talking about 25 to 27 American. So why 25 to 27 and not any other random numbers? On the positive side, I'm factoring in that about 25% of the company's current valuation is cash and marketable securities. I'm also counting on Canopy being able to maintain its competitive advantages with regard to branding and marketing. Other factors I'm accounting for include rapid sales growth, its Constellation partnership, and the possibility that Constellation could choose to acquire Canopy outright by perhaps 2022 or 2023, when it has the financial capacity on its balance sheet to do so. So on the negative side of the equation, I'm counting on Canopy's growth to lose money through fiscal 2020, to burn through some of its cash on hand, and to see the average price per gram of what it sells deteriorate at a faster pace than its per gram production costs. It will fail due to economies of scale, coupled with ongoing share-based dilution. Caution appears warranted. With a little bit over $1 per share in cash flow projected by Wall Street on fiscal 2021, my personal expectations is for Canopy Growth to deliver about a 50-cent EPS for its first operating profit in 2021, with sales growth likely to have tapered to around 50% to 55% annually by 2021. A share price of $25 to $27 would yield a PEG ratio of around 1. So they're saying Canopy Growth will be more attractive at around $25 to $27 a share. And looking at Canopy Growth right now in the American CGC, they're currently priced at $45.25. So that would mean that they would lose almost 50% of their value to drop that low. Who thinks Canopy Growth is going to drop that low? I doubt it. Of course, Canopy Growth would be a lot more attractive if they lost 50% of its value, but it's going to take a lot of movement to move that company down, and it would go down to about an $8 billion market cap. It's a tough call. We would have to see some major movements, some really bad news in order for that company to go back down to the $22, $25 per share. So now let's move on to the big news, which is Aurora widens European footprint with purchase of Portuguese cannabis company. Aurora Cannabis agrees to acquire a 51% ownership stake in Gaia Farm. So Aurora Cannabis announced that the acquisition of 51% ownership stake in Portugal's Gaia Farm Tuesday, as the company looks to establish a local facility to produce medical cannabis and related products as it widens its presence in Europe. Gaia last week received approval from the Portuguese Health Ministry for its application to construct a EU regulatory compliant cannabis cultivation facility. So Aurora is now active in 24 countries and said that it believes that it has the largest global footprint of any cannabis company. Aurora jumped 4.7% on Monday after the analysts at Jefferies initiated the company with a buy rating. Aurora shares were up 0.7% in trading Tuesday. So, of course, this looks like good news. Aurora is expanding worldwide. They are now in 24 different countries across the world. My only concern is, how are they purchasing this company? I really hope they're not purchasing with shares. Are they using the $350 million of cash that they got from a loan? Or are they diluting even more shares to purchase this company? Unfortunately, it doesn't say exactly how they're purchasing this company. I also did find another article on Aurora Cannabis purchasing Gaia Pharma, but I don't think it says anything about how they're purchasing these shares, but they do have a little more information. The first phase is expected to result in production capacity of about 2,000 kilograms per year and growing to 4,000 kilograms a year once the second phase is completed. US listed Aurora shares were up. So it's a very small facility, 2,000 kilograms per year, 4,000 kilograms per year. That barely raises their capacity. I think Aurora can definitely produce over 100,000 kilograms, and they're expected to produce over 500,000 within the next couple of years. So I'm not sure exactly why they're buying such a small facility with such a small production capacity. And once again, my concern is, how are they purchasing this company? It doesn't say exactly how much they're paying for it. I guess in time we will find out exactly how much they paid for this company and how they're purchasing it. And fingers crossed that they're not diluting any more shares, because that's the last thing investors want. I'm going to end this video off with two interesting articles. One is key for investors watching the cannabis sector valuations. So investors and traders face challenges due to volatility in the cannabis sector. As a result, investors should pay close attention to the valuations in the cannabis sector. So far, the overall cannabis sector has performed well in 2019. Canopy Growth has returned as much as 67% year to date. Aphria has returned 70%, while Aurora Cannabis has returned nearly 50%. The returns and the cannabis sector economic potential have caused serious investors and well-respected investment firms to take a hard look at the cannabis industry. Recently, two investment firms started their coverage on cannabis stocks. Seaport Global initiated coverage on several cannabis stocks. The company gave a neutral rating on Canopy Growth. Seaport Global also initiated coverage on Aurora Cannabis with a neutral rating. Jefferies initiated coverage of Aurora Cannabis with a buy recommendation. The firm also provided a buy rating for CanTrust, Organigram, and the Green Organic Dutchman. Investors should look at cannabis stocks valuation to determine if the market is ahead of reality. Is the market paying more than what the investment costs? And also there's another article right here, 3 arguments for and against buying Tilray. So I'm not going to read this full article, but if you guys want to check it out, I'm just going to touch up on some points. So 3 reasons Tilray could make you a marijuana millionaire. millionaire. Possibly the top reason Tilray should be considered as a long-term buy is the company's ability to attract brand name partnership. Whereas peers such as Aurora Cannabis and Afria are still struggling to land a major partnership in the beverage, tobacco, or pharmaceutical industry, Tilray has managed to nab a partner from 2 out of the 3 industries. This is a pretty long article. If you guys are interested in this article, you guys can check it out. But anyways, that's it for now, guys. Let me know what you guys think about Aurora's new acquisition. Also, if you enjoyed this video, don't forget to give me a thumbs up and hit that notification bell, smash that subscribe button. And also, if you guys want to check out my new channel, I'm going to have it right here. You guys can check on it. It's called Too Much News. I'm trying to get to 100 subs. Get me to 100 subs and I'll be posting up a new video. Check it out. And that's it for now, guys. Bye-bye.